Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since it's been out. The government has been Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your weekdaily morning show where we bring you the latest in Bitcoin and cryptocurrency, technical, on-chain, and fundamental analysis every single morning at 10 a.m., where we are going to be talking about today many different things. As you saw in the title, this is going to be an extremely important week in the history of cryptocurrency for a plethora of reasons. We're going to dive into many of them. Number one, Sam Bankman-Fried, former CEO and founder of FTX, is going to be testifying before Congress. Number two, we're going to be getting CPI data dropping tomorrow. Number three, we're going to be getting the effective federal funds rate dropping the day after. We're also going to be having a Jerome Powell speech, and we're going to be having, more than likely, a major breakout occur on Bitcoin following that CPI and EFFR release. Whether it's going to be to the upside or to the downside is what we're going to be discussing today. We've got a lot to cover, a lot of other peripheral news as well that we need to go over, and we're going to jump into all of it. And also, of course, we cannot forget one of my favorite segments, one of my personal favorites. That would, of course, be the must-watch. And there's been a lot going on over on Elon Musk's Twitter relatively recently, so we're going to take a look at that here in just a second. But first, let's go ahead and jump in and recognize some green names and some other people in chat. Thank you guys so very much for checking in with us here. Let's go ahead and make sure that everything's good. Okay, cool. Mike Lowry is in chat. He was the first one. Shout out to Mike Lowry. He's a green name and a mod. Thank you so very much for your continued support, Mike. Grand Roofing Incorporated is in chat as well. Said, good morning, Jebb. What's up, my friend? Good to see you there. We got Queen in chat, a mellow fellow. Oh my, lots of people. We got Mike Lowry in chat again. Alyun? I always forget how to say your name. You'll have to correct me if I'm wrong. Alyun. I think I got that right. Mike Lowry said, smash the likes for FinSov. Let's see. Mike Lowry also said, glad to hear our prayers worked and all is well. The Lord is good and he is protecting us. Everything seems to be okay with the pregnancy to the best of our knowledge. There's still, some things that are concerning. I'm not going to get into it too much, but we're keeping a very close eye on it. But Sarah's at least feeling a little bit okay right now. So it's kind of hard for me to say whether things are good or not, because ultimately I don't know, but we're praying and we trust the Holy God. Anyway, Grand Roofing, as I said, in chat. Crypto Smitty is in chat as well. Let's see who else. I was actually waiting to get up on my next roof to leave a quick good morning, but the app was glitchy and slow to load. Well, hello. Be safe up on the roof. We got Justin Eubanks in chat. Colin McDonald. Tristan Williams said, good morning, everybody. First time I've been able to hop in live for a while. Hope everyone is well. Everyone, I hope, is doing well as well. Queen said, love you, Sarah and family. Thank you guys so much. Brian D said, good morning, future millionaires. Good morning, you future millionaires, and make sure that you remember the place of money. It is not something that you should serve. It is something that should be a servant to you, and that's that whole concept of financial sovereignty. We talk about it a lot on the channel. Financial sovereignty is this concept that I have of your money and your finances and your financial institution situations, the banks you use, the currency that you operate on, serving you rather than the other way around. I want you to have sovereignty, i.e. authority, and almost this idea of kingship, of control and rule over your finances rather than them having that rule over you. That's what financial sovereignty is you having the sovereignty, not the finances, not the systems that uphold and generate those finances. That's what we mean by financial sovereignty, and that's what we're trying to help you guys achieve every single day here on the Crypto Jebb YouTube channel. But let's go ahead and jump into one of your favorite segments. It would be none other than the must-watch Musk watch. Let's take a look over here. Elon Musk has been getting very political recently. If you guys don't know, there's been a series of drops called the Twitter files, and there are 4 of them now. The first one was having to do with the Hunter Biden laptop. The second one, I forget what the second one was on. It was on... had something to do with removing and shadow banning. And the third and fourth parts have to do with the removal of former President Donald Trump. Not going to get into too much of that, but I would highly recommend you go and read these, whether you agree with what happened, whether you don't agree with what happened, left, right, Democrat, Republican, don't care. I just think it's very important that everybody sees what's going on here, because there is a conversation that needs to be had about what occurred at Twitter, no matter where you stand on what was right and what wasn't wrong. So Elon, as I said, has been getting very political recently. He says the branch Covidians, I'm going to try and say it that way so YouTube doesn't take me down, said are upset, lol. And then he's talking about the woke mind virus. I'm going to leave that one there for you guys. But he said the woke mind virus is either defeated or nothing else matters. Ultimately, guys, whatever you think about, wokeness, the fact is we have a republic, a constitutional republic, and a democratic voting system that is absolutely essential to the way that the modern free world operates. And that does not work without freedom of speech, although freedom of speech does also not allow for you to, go out and say fire in a crowd theater and everything. I'm not going to get into that. My point is that it is one of the biggest issues of our day, and it is very interesting that Elon Musk is taking it on. I'm just going to leave these right here. He's starting a complete firestorm on Twitter, which is pretty funny. I mean, being the owner of Twitter, would it have been... Let me just ask you a question. If somebody had bought Twitter and they're like, oh, suit and tie and super boring and never stepping on anybody's toes, that's not what Twitter needed. I mean, come on. Twitter is a place to go and drop a bunch of really flamey opinions. And that's exactly what Elon Musk is doing. He's using the platform exactly the way that it was intended as. So I just think it's pretty funny that he's the one that owns it. Not going to go on too much more here. I just think it's interesting to look through this. Calling all bots and whatever that is, please attack me. Twitter is speeding up. The bots are in for a surprise tomorrow. Yeah, so he's been knocking out a lot of bots, and a lot of people have been saying, like, took him 5 years to do anything about bots, and now he's working on it. Twitter is both a social media company and a crime scene. Interesting. All right, so as I said, not going to go into too much detail on this. Just want to go ahead and point a lot of this out. He did say this: if the Fed raises rates again next week, the recession will be greatly amplified. Let's pause there and let's talk a little bit about the geopolitical backing of where we are right now, because the entire point of today's stream is to talk about this week. But to have proper context for this week, we must first have proper context for the geopolitical situation going on around the world. First and foremost, the biggest single driver of geopolitics ever since February 24th of this year has been the Russian-Ukrainian conflict. Period. Full stop. Nothing holds a candle to it. The entire global order is unraveling following that war. We have not seen the kind of things going on geopolitically in Russia, in Europe, in China, in Australia, in South America, in Africa, in the North America. If you didn't notice, I just named the entire planet since probably 1991, when the Soviet Union collapsed in the first place. The last 30 years, Russia has been either playing friendly with the West or not. Obviously, in the last 15 years or so, they've been moving more in the direction of not. And so far, obviously, this year has been very, very poor for relations, I suppose would be the most political way of saying it without stepping on it too many toes. The fact is, we are seeing globalization unravel. We're seeing a massive shift in the way that manufacturing is taking place. We live in a consumerist economy. So if you have a global order where parts are being manufactured, where first step components are being manufactured in Thailand, and then they're moving up the chain into medium component manufacturing in China, and then they're moving across into Japan, and they're having high-end chips being made in Japan, Taiwan, South Korea, and then they're being assembled into a final product in the United States to be delivered to customers in Germany. You have a global supply chain that was first shook to its very core by the pandemic 2 years ago, and then 2 years later, we see a global conflict shake it even more. If you've seen prices going up a lot, if you've seen inflation of currency, if you've seen massive shifts in housing markets, if you've seen major food crises going on in many different countries around the world, if you've seen huge implications on the Bitcoin market, which we're going to tie all this back into crypto, don't worry, but we have to first set the stage for us to play on. It has to do with those two geopolitical factors. Number one, the lockdowns. Number two, the war in Ukraine. The lockdowns were the biggest single geopolitical shift that we had seen since the 2008 financial crisis and housing market collapse in the United States, which shook global markets. The lockdowns were the biggest single shock to any market that we had seen since then. Before 2008, it was 2001, September 11th. September 11th, 2008, 2020. Those are the three biggest time periods, biggest crises that we had seen. Notice each of those first three were almost a decade apart. We saw the lockdowns followed by the war in Ukraine happen within 2 years. The world had not recovered from the lockdowns. We had not reestablished a new global order by that point. What we had not done has built any kind of stability upon which a war would be able to attack, but maybe not destroy. We did not have the stability to be able to withstand a global conflict. Make no mistake, this is a regional conflict as far as boots on the ground. As far as economics, this is a global conflict because the United States is spending money. Europe is spending money. China is not spending money, but they're losing money because of trading issues. All of that has to do with what's going on in crypto. Then we also have the knock-on effects of that. We have the inflation. We have things like the Inflation Reduction Act. We have issues going on in Europe. We have effective federal funds rates going through the roof in the United States, and then we have funds rates, basically same central bank rates, being set all around the world. Essentially, what is going on right now is that every other economy in the world is not as stable or as strong and resilient as the United States, because without globalization, which is unraveling at the seams right now, every single other country besides the United States is not large enough, and the United States isn't on its own either. It's just in the best situation of all of them. None of these countries are in a solid standing to stand on their own. Our economies are so interconnected at this point. If you just pull the plug on globalization, every single country around the world has to go back to the drawing board on how they're going to get goods and services to their population and maintain a modern functioning economy based on electronics, semiconductors, the internet, and the electricity. The United States is the largest economy. It has a chance of doing that, especially in El Paso and Texas, with all of the manufacturing moving back to the southwest of the United States. But you run into a major issue the world over. That is leading to the United States raising the effective federal funds rate very aggressively, far more aggressively than we've seen from Canada, far more aggressively than we've seen from the European Central Bank, far more aggressively than we've seen from the Bank of England, far more aggressively than we've seen from anywhere else, because none of these other countries have the strength and the power to raise rates as quickly and as sharply as the United States has. So the United States wants to raise interest rates very aggressively and then probably drop them down to 2%, probably not to near zero, because remember, there's this unraveling of globalization going on. Russia caused that. The pandemic started it. Russia exacerbated it. And if China goes for Taiwan, that's the end. For the next 20 years, you probably don't see a similar globalized system that we've seen since the fall of the Soviet Union. So the United States wants to raise rates very aggressively, very sharply, because the United States federal government realizes that we are in the strongest position of all 203 UN member states in the entire world. We're in the single strongest position of every single one of them. So the Federal Reserve wants to raise rates very aggressively so that they have room to pull them back as economic stimulus when a recession comes. And make no mistake, a recession is coming. This is going to be a very difficult decade because all of the systems and assumptions and the entire world order that the success of the late 2000s and 2010s was built on is currently kind of being tested and falling apart. The geopolitical landscape that allowed for that growth is coming undone. So the United States federal government wants to raise those rates very aggressively so that they can use the lowering of those rates as economic stimulus here in a year, 2 years, 3 years. That's actually very important for crypto because remember, the federal funds rate is the single most powerful central party set number and metric for Bitcoin. It's more important than CPI. It's more important than United States GDP. It's more important than any other number that's set by a centralized entity in the entire world. Right now, we're living in a Fed-run market, which is what some people are calling it. The question for this week is whether or not we're going to have a risk on asset movement to the upside as a result of the Fed having a slightly more dovish tone on rates. Are we going to see the Fed come in with a 50 basis point rate hike or a 75 basis point rate hike? If they come in with a 50 basis point rate hike, then we have to ask ourselves the question, are they going to come in with a 25 and then plateau at 5%? Or seeing CPI coming down and jobs data doing surprisingly well for what should be a recession, are they going to continue running at 50 basis points for a year and actually maybe raise up to 6, 7, 8% because they have the ability to, and that would allow for the United States to maintain an extremely strong dollar, maintain dollar hegemony over the rest of the world, and then use that strength of the dollar to solidify their position and NATO's position against the rest of the world and shore up our economic solvency against economic combatants like Russia and China, which are becoming not surprisingly, far more hostile as they have massive demographic crises going on. You see how the geopolitical landscape ties into Bitcoin. Bitcoin is not in a bubble. People want to make it out to be, and it's simply not. If you don't understand the geopolitical landscape and what's going on, you're not going to understand why the Federal Reserve is raising rates the way they are. You're not going to understand why CPI is as high as it is. You're not going to understand some of the triggers that led to Sam Bankman-Fried being able to do what he did. You have to understand the entire picture of financial markets and then look at crypto. I made that mistake for a few years. I looked at crypto and I didn't look at the rest of the world, and I was blind. Luckily for me, during that time, there wasn't a lot going on in the rest of the world that was out of the ordinary. But right now, we're in a very extraordinary end of an era, beginning of a new era phase. We're in a transition phase the same way that the world saw in 1991, and we have not seen a transition of this kind in those 31 years since. This is an extremely important era in geopolitics. In the next 3 to 4 or 5 years, the chessboard's in the air, and we're going to see how the pieces land. But what we need to do is we need to pay very close attention to what's going on geopolitically with the world financial markets, and then use that to take a closer look at what's going on in Bitcoin in the United States. And that's what we're going to do in this stream. Let me just check and see if there's anything going on in chat that we want to respond to. Thank you guys so very much for tuning in. We got 440 people watching. If you have not already, make sure to smash that like button. Let's see if we can get up to 300 likes here in the next couple of minutes. We got Colin McDonald in chat, Crypto Sec Guy, Matt C in chat, Flavio Goncalves, welcome as a Jebbi youngling. Just joined as a member. Really appreciate you for joining. That means a whole lot to us. Kasha Katz in chat. What's up, my friend? Tristan Williams in chat. All right. Good deal. Okay, so let's go ahead and jump on over to CoinMarketCap. Take a look at Bitcoin. Right now, as you know, Bitcoin's trading sideways in this range at $17,000, sitting at $1,250 on Ethereum. Tether, USD Coin, Binance USD, all the stable coins, of course, sitting stable for now. Hopefully, they will stay that way. Binance is down 5% on the day. Definitely some news that we're going to want to look at over here on Binance. A lot of people saying that there are red flags going on with Binance. We're going to read a little bit about that here in just a moment. But we also need to take a look at what's going on with things like market capitalization. Bitcoin currently sitting at $1/3 trillion market cap, $153 billion on Ethereum. We've also got the exchange reserve data over here, and that's one of the things that we're going to be looking at quite a bit today are the exchange reserves. If you guys remember, over the last several weeks here on the channel, I've been kind of shouting that Binance needs to give more information about its own exchange. Binance is the one that set this trend in motion of releasing reserve data for their exchange. They currently have $57 billion in assets. This was $66 billion 2 weeks ago, which means there's $9 billion that are gone. And those $9 billion more than likely did not just vanish. They probably were withdrawn. We've seen huge amounts of daily exchange withdrawals going on relatively recently to the tune of $1 billion a day at some point. We are currently seeing 27% of their allocation sitting in BNB, another 26% of their allocation sitting in BUSD. The thing that's concerning to me about this is that, number one, we do not see what Binance's liabilities are. Number two, I can't tell based on this page whether these are deposits or whether this is the entire holding of Binance in general. Because if this is all of the holdings of Binance in general, we don't know how much of this is reserve and how much of this is the actual holding, one-to-one holding of the exchange users. And the reason it's so important on Binance, it is important on other exchanges, but the reason it's so very important on Binance is because Binance is leaps and bounds ahead of every other exchange in the entire industry. And Binance likes it that way. Binance wants to be king. Does it surprise you at all that Binance, who owns CoinMarketCap, is ranked at 9.9 in the score on CoinMarketCap? They use themselves as the standard.
Coinbase sitting at 8, Kraken is sitting at 7.5, KuCoin sitting at 6.6, Bitstamp 6.6, Bitfinex 6.4, OKX 6.2, Binance US 6.2. Interesting, funny. Bybit sitting at 6.1, which they're in the news today as well. I have my concerns over Binance, and we're actually going to start there. Binance proof of reserves raises red flag, says report. Corporate structure, Bitcoin liabilities, and internal control quality are among the points of concern. Binance's efforts to improve transparency of its reserves are also exposed red flags in the crypto exchange's finances, according to accounting and financial specialists consulted by the WSJ. As noted by a former accounting standards board, FASB member, an investment manager, the report released by the audit firm Mazars give not bringing investors confidence about the exchange's finances, as it lacks information related to the quality of internal controls and how Binance's systems liquidate assets to cover margin loans. Another red flag raised by the newspaper sources regards the lack of information about Binance's corporate structure. According to the report, Binance's chief strategy officer, Patrick Hillman, was unable named Binance's parent company, as Binance has been going through a corporate reorganization for almost 2 years. Differences between the total Bitcoin liabilities were also highlighted. The exchange's proof of reserve shows that Binance was 97% collateralized, not 100, excluding assets lended to users through loans or margin accounts, indicating that the 1-to-1 ratio of reserves to customer assets was not achieved. Mazar's letter states about the difference. We found that Binance was 97% collateralized without taking into account the out-of-scope assets pledged by customers as collateral for the in-scope assets lent through the margin and loan services, often resulting in negative balances in the customer liability report. With the inclusion of in-scope assets lent to customers through margin and loans, which were over-collateralized by out-of-scope assets, we found that Binance was 101% collateralized. John Reed Stark, senior lecture fellow at Duke University of Law and former chief of Securities and Exchange Commission Office of Internet Enforcement, it's a pretty big title, stated in a Twitter post, Binance's proof of reserve report doesn't address effectiveness of internal financial controls, doesn't express an opinion or assurance conclusion, and doesn't vouch for the numbers. I worked at SEC enforcement for 18 plus years. This is how I define a red flag. Following FTX's collapse, Binance last month released a proof of reserve system that allows users to verify their assets using a Merkle tree. The initiative, however, was labeled pointless by rivals as it fails to include liabilities. I'm all for exchange transparency. I love that they did that, but it's absolutely true. And the executive over at Kraken who's been blowing the whistle on this, and I agree. We don't have enough data to know whether or not what Binance gave us is sufficient. Let's just look at something here. Let me show you what proper financial releases look like. This is what Coinbase is required to release by the Securities and Exchange Commission over here. I'm not going to go into even one of these numbers, but you can see all of these numbers over here about how Coinbase is operating, and this is not even close to all of it. This is just on Yahoo Finance. This is not the securities filing. This is just something that Yahoo Finance has. I mean, come on. Compare that to what we're seeing from Binance. What do we have from Binance? We have a nice fancy pie chart here that tells us how much of their tokens are allocated in where. That's the issue that we're running into. We have some data, but we don't have enough data. We don't have all of the data. And also, for some reason, this Una said Leo looks like it's making up 33% of the allocation. Something weird just happened here. There we go. That fixed it. We don't have enough information here, and what information we do have is actually a little bit concerning, because if you look here, $15 billion of BUSD is held on that exchange when there's 22 billion BUSD in existence. Where is the rest of it? Excuse me, not where is the rest of it? Why is so much of it being held on Binance? And are they using their own token, BNB and BUSD, as reserve, as collateral, or are these just user deposits? These BNB and BUSD, it makes up over half of their reserves. Is this user deposits? Or is this actually part of the reserve? We don't know, and that's what we need to know. So we need to hold Binance accountable, and we need to hold CZ accountable to what he said, which is that you should never use your own asset as collateral. That's what he said following immediately after the downfall of FTX. Let's not forget about that tweet. It's very important. They are held accountable because they are trying to put themselves in the position of an industry leader. The last time we saw that happen was Sam Bankman-Fried, and 3 weeks later, FTX imploded. So I'm not saying that just because Binance is trying to put themselves as an industry leader that they're going to collapse. I'm not saying that. I think Binance is in a much more healthy state than FTX was. However, I do have a lot of concerns about how much of their own assets are sitting on their own exchange. Very interesting to me that a cryptocurrency exchange, if this really is just the deposits, would only have 10.3% of their entire token allocation in Bitcoin. I mean, come on. I understand having a lot of it in a stable coin, but 10% in Bitcoin, that's it? That's a little bit sketchy to me. Not going to lie. I'm going to be totally honest. Not the biggest fan of that. Guys, as I said, if you're enjoying today's stream, make sure to smash that like button. We got Opus number 1 in chat. Donated $5. Said it. Thoughts and prayers are with your family, my man. What DEX exchange do you prefer? And why, and finally, will Crypto Jebb go to the Rumble app as well? I've had people trying to get me to go to Rumble for a very long time. So, yeah, I don't think that's going to happen. As far as DEXs, guys, to be honest with you, like I've told you, I'm mostly an investor at this point. So I use Coinbase to go ahead and buy some cryptocurrency, and then I sign off. And frankly, I'm going to leave the DEXs up to you guys. It's not my area of expertise. And because, quite frankly, the vast majority of exchange activity in this industry is going on centralized exchanges. And that's not great, but it's kind of always going to be that way. On a side note, we're going to get back into the actual topic here in just a second. But on a side note, a lot of people want Bitcoin and cryptocurrency to be a lot more moral. They want to get all the dirtiness, the filth, the immorality, for lack of a better word, out of crypto. And people think that it's going to happen through decentralization. It won't. It won't remove all of it. There's only one place where you will find total freedom from the power of sin, and that is in Jesus Christ. So just remember that, guys. I love decentralization. I'm a total fan of it, but it is not the Messiah. There's only one. His name's Christ. Anyway, let's keep moving here. We're going to take a look here at Bitcoin for just a moment, and then we're going to keep moving on through some of these stories. As you can see, we have a lot of them, so let's go ahead and keep it going right now. As you guys know, we were looking at this rising wedge last week. This rising wedge is actually very important because this rising wedge represents the pattern that Bitcoin is more than likely going to be attempting a breakout of here in a couple of days when we see the CPI data drop and when we see the effective federal funds rate be released. We're likely going to see a massive movement tomorrow and the next day because tomorrow CPI drops the day after the EFFR comes out, effective federal funds rate comes out. You'd more than likely see a lot of volatility during that time. Now, there's a few things to keep in mind here. Number one, we do not have a lot of confidence from the bulls at all. We're setting slightly higher highs, but it's really sitting here in a rising wedge. Maybe you could call it an ascending triangle pattern. The fact of the matter is, it's not exactly what we were hoping for when we're sitting there thinking, oh, we want Bitcoin to go up to $18,000, $19,000, $20,000. You don't look at a market like this and say, yes, that's exactly the setup that I wanted to see to expect Bitcoin to go into a major rally. That's not at all what you look for. What we're looking at right now on the contrary to that is, instead of a setup for a break to the upside, this is actually looking like a head and shoulders pattern potentially. This is almost looking like a Bart Simpson pattern, and you could also say that it's a rounding top. You could even come in here and draw a curve right here, just like this, and you can see that the market is pretty much curving straight to the downside right now. I love these curve paths here in TradingView. You can see this curve path right here. I'm able to get pretty much all of these points. That's pretty much what we're seeing. We're curving to the downside, and that doesn't give me a lot of confidence in this market. Looking at Lux Algo, by the way, we're also looking at a sell signal. We saw a sell signal and a buy signal and a sell signal. None of these three were confirmed, but what we are seeing right now is that Bitcoin did briefly drop below the EQ cloud. We're also seeing a crunch here, a constriction on the reversal zones, indicating that there could be a period of higher volatility coming out in the next several days as a result of the low volatility squeeze coming with the large, more highly volatile movement in breakout. We also see that there was a bull flag that took place right here, and that bull flag did not manage to break to the upside. Instead, we broke to the downside and fell below the EQ cloud, which is now starting to converge on itself very sharply. The EQ cloud was coming up and giving us support, but now it is not. It's actually just trading sideways and not doing a whole lot of anything bullish for us. We are, as I said, also under a sell signal, although that sell signal is not confirmed. We would need to see Bitcoin come down to at least $16,500 before we would be able to see that sell signal confirmed by having a red trend catcher. Right now, we are in sideways movement, waiting. I don't personally expect to see a lot of anything today. I do, however, expect to see a lot of movement tomorrow. And actually, I take that back. Probably not a lot of movement tomorrow. Probably a lot of movement on Wednesday. And the reason I say that is because tomorrow we're going to see the CPI data come out, which is likely going to be 7.2, maybe 7.1. It's currently 7.7. Then you're going to see the effective federal funds rate come out the day after, and that's going to tee us up. Or excuse me, the CPI is going to tee us up, and then we're going to swing with the EFFR. We'll see what that does, and then Jerome Powell is going to come out and speak as well. If we see 7.1 come out and then we see EFFR at 50 basis points, you're likely going to see a lot of volatility on Bitcoin, probably to the upside, but probably not very far. And the reason I say that is because Bitcoin is currently trading sideways, yes, but it's not really able to do a whole lot with that momentum. Excuse me, it's not really able to gain a lot of momentum because of the sideways trading and because the dust is still settling from FTX. So this is an extremely important week in crypto, not so much because of what the price might do in this week, but more so because of the setup that we will be carrying forward for the next several months. If we do see a 50 basis point rate hike by the Fed, then that, again, brings us the question, are we going to see 25 then 0 and plateau at 4.75? Or are we going to see 50, 50, 50, 50 and go up another 2% and then see the effective federal funds rate jump all the way to 7, 8, 9% so that the United States federal government retains that power, that monetary, their financial sovereignty, if you will, to drop rates and to give economic stimulus during a recession that will absolutely hit the global economy at some point in the next 5 years. It is so obviously coming. We just don't know when or how deep or how it's going to occur. That's the setup that we're looking for. What's the CPI going to do? I've seen gas prices come down quite a bit. I'll be honest, one of the ways that I kind of predict in my head whether or not CPI is going to be up or down, very simple, kind of a gut feeling. What's gas prices doing? Energy is one of the largest drivers of CPI. So if in the United States you're seeing gas prices go down, you're probably going to see a drop on CPI. And I don't know about you, I've seen gas about 30 cents cheaper. I even saw some below $3 over the weekend. So we may end up seeing that drop on CPI. And then from there, we would see the effective federal funds rate jump at only 50 basis points. That would tee us up for a recovery, not a super bullish quarter, but a recovery in quarter one, moving into potentially a very bullish quarter two of this coming year. If, however, we see CPI move sideways or, God forbid, somehow went up, which is possible, but unlikely, and we saw the effective federal funds rate set at 75 basis points, then you would probably see Bitcoin drop down to 15.5 and then start testing towards fresh lows. So those are our two scenarios, and we're going to pay close attention to what happens in actuality over the next several days. Let's move up here, though. There's a lot of articles that I want to go through here. This is just a headline I want to read you. An upside surprise, a new dot plot in a risk-on family. 3 things to watch as markets brace for the last inflation report and Fed rate decision of 2022. Core service inflation slowing, but not slow. So wage gains are still running at levels well above what is consistent with 2% inflation target, even as there are signs of disinflation in the goods and housing sectors, Barclays said this week. The multinational investment bank expects a heightened focus on core services, excluding shelter prices in the November CPI data and in the 2022 and in the later part of the 2022 inflation data. You also see stocks appear to be teetering between 2 potential outcomes for November and December CPI, and that's exactly what we're looking at here. Now, I also want to jump over to this article, actually, by Cointelegraph. Biggest week of the year. They're saying similar things that I'm saying. They're talking here about most important CPI print, and I'm showing you some of these just so you can go read these articles. I'm not actually trying to run through all these because we obviously don't have time to run through every single one of them. Most important CPI print forms key focus. This is what we were talking about earlier. We're going to see that CPI data. QCP said a higher than expected CPI print and more hawkish Fed have the potential to invalidate the rally, the very small one that we're in right now, like we saw in the April and August reversals. On the other hand, another disinflationary print could see many chase a continuation of the rally into year's end. They talk about here how the effective federal funds rate is likely going to be a 50 basis rather than a 75 basis. And then they talk about how there's a lot of what should I say here? volatility, let's use that word, in the Bitcoin market. And they say this is why you don't want a Fed-controlled market. You don't want a Fed-controlled market. The reason the Fed is controlling the market right now is because the geopolitical situation is such a mess. And that's why I keep talking about it. You probably wonder, Jebb, why do you keep talking about geopolitics on a crypto channel? Because geopolitics impact U.S. economic and monetary policy, which impacts Bitcoin. You're zooming out so that we can zone in and actually get a better understanding of things. If you're looking at something under a microscope and you're trying to figure out what it is, you're probably not going to be able to tell. If you zoom out and figure out what it is, then when you zoom in, you have the context to properly analyze what it is you're looking at under the microscope. Bitcoin is under the microscope. Geopolitics is looking at it from a 30,000-foot perspective up high in a plane. So they also talk about here, and I would agree, BTC spot price waits for action. We're sitting sideways, guys. We're not doing a whole lot. Right here, they're talking about how Bitcoin is sitting in between the realized price and the balance price, which are two very important on-chain metrics. I'm not going to go into too much detail on that, but he said, I'm interested in a sustained movement outside of this range, which is yet to occur. I would love to see that up above $20,000. It has not happened as of yet. I'm just kind of scroll through here just so you guys can see it. This is talking about the Dixie. US dollar teases new strength. If we go and look at the Dixie, then you can see that the Dixie very well could be going into a break to the upside relatively soon. We've got a falling wedge right here, and we're trying to set this symmetrical triangle pattern in motion. This would more than likely lead Dixie quite far to the downside, probably down to 101. But if that doesn't happen and it bounces and rallies, that would be wonderful. Of course, even though the 100 level on Dixie is not inherently very important, it is a psychological level, so that could end up becoming important on the dollar currency index at some point relatively soon. Supply shock ratio nears 10-year high. This is the ISSR is measuring at 3.537, whereas in 2014 it was measuring up here as well, and that correlated with the bottom of the market. That's just another on-chain metric telling us that the bottom may be very close. We also have Arthur Hayes over here, who is the CEO of BitMEX, talking about how Bitcoin miner selling is over. If this is true, and that's a big if, that would be very important because Bitcoin miners being sold is one of the larger factors of the drop in Bitcoin. We're seeing a lot of transacting of not only the miners, but also of Bitcoin. We're seeing people that bought Bitcoin at $38,000 selling it to people that are now buying it at $15,000. We saw people that bought miners when Bitcoin was trading at $60,000 and bought it at MSRP are now selling it on a 30-40% discount. Now that Bitcoin is down here, it's allowing people to get lower entries so that they are in a more strong position for a rally to the upside in a bull market. If people are holding Bitcoin at $40,000, $50,000, they're in an unstable position because they are down a lot and they may end up wanting that money. So they a lot of times will sell that asset at a loss just to get something back so they could reinvest. However, if you're holding at $15,000 and Bitcoin's at $17,000 and it looks like a bull market's coming in the next 12 to 24 months, you're going to hold that Bitcoin. Same thing with the miners. So we're seeing a lot more stability come into the hodling of Bitcoin and come into the hodling of the mining equipment. A lot of people that wish they had have sold at $69,000 are finally biting their teeth and selling because they are getting tired, and other people are buying and holding those assets such as Bitcoin, Ethereum, and the miners. He also says, I believe the forced selling of Bitcoin by CELs and miners is over. If you had to sell, you would have already done so. He wrote, there's no reason why you would hold on if you had an urgent need for fiat to remain a going concern, given that almost every major CEL has either ceased withdrawals, pointing to insolvency at best, or gone bankrupt. There are no more minor loans or collateral to be liquidated. I don't know if I completely agree with that statement, although Arthur Hayes probably knows something that I don't. I don't have as much confidence as he seems to that everybody who's going to go bankrupt has. Although, I think we are obviously one step closer to that today than we were yesterday, than we were the day before, than we were November 8th when we saw FTX blow up. Of course, we are closer to complete and total capitulation than we were. I am a little bit more skeptical of the idea that we are there just yet. And moving on from that, kind of diving back into that, there's a whole article here that I want to read on that. Arthur Hayes, the BitMEX CEO, says Bitcoin bottomed as everyone who could have gone bankrupt has gone bankrupt. Let's read a little bit about this here and kind of pick apart what he's saying and whether or not we agree with him. Arthur Hayes, the former CEO of crypto derivatives platform BitMEX, thinks the worst might be over for Bitcoin. This cycle, as the largest, most irresponsible entities this cycle as the largest, most irresponsible entities have run out of Bitcoin to sell. Looking forward, pretty much everyone who could have gone bankrupt has gone bankrupt, he said in a December 11th interview with crypto advocate and podcaster Scott Melker. By the way, if Scott Melker is watching this, shout out to you, my friend. He's a good guy. Hayes elaborates on his stance by explaining that when centralized lending firms have financial troubles, they will often call in loans first, then sell Bitcoin first, because it operates as the reserve asset of crypto and the most pristine asset and the most liquid. When you look at the balance sheet of any of these, of the heroes, there's no Bitcoin on it because what they do, they sold the Bitcoin as they were going bankrupt. They sold the Bitcoin during the wave before they went bankrupt. Hayes voiced a similar argument on December 10th blog post explaining that while this credit crunch is ongoing, large physical sales of BTC are taking place on exchanges from both CELs trying to avoid bankruptcy and trading firms who have had loans recalled and must liquidate their positions. Let's try this again. In PIMDAS, I argue that BTC has bottomed and that and then talk about which type of cryptos I will hold while waiting for more for the money printer to go burr once more. Pretty funny. I can't demonstratively prove that all Bitcoin held by these failed institutions was sold during the multiple crashes, but it does look as if they tried their best to liquidate the most liquid crypto collateral they could right before they went under. That I would agree with. Most of the entities that have not gone bankrupt have already liquidated most of their liquid assets in attempting to not go bankrupt. So even if they don't go bankrupt, they've already dropped a lot of their junk on the market and dropped the price therefrom in the first place. I would agree with that assertion. I don't have a lot of confidence that everybody who's going to go bankrupt has. We've seen FTX, we've seen Luna, we've seen Three Arrows Capital, Celsius, Core Scientific, name them however you want. BlockFi. I almost forgot BlockFi. All of these companies have gone bankrupt, gone under. We've seen tokens go down. We've seen Luna. We've seen UST. We've seen FTT. We've seen anything to do with FTX. Solana's jumped off a cliff. It's not dead, but it's close. A lot of the apocalypse that was going to happen has now occurred. The question then becomes, what happens next? What happens in an industry that is in ashes? What kind of phoenix rises? Because I think we all agree that one will, but of what type? That's what I want to know is what, and this is a little bit off topic for what we're talking about today, but I'd like to hear your opinion in the chat, and I'd like it to be something for you to chew on. What does the phoenix of crypto look like from here? What do we get next? What comes next? Do we see Bitcoin and cryptocurrency have this new surge of entrepreneurial and individualistic cypherpunk memory come about, and we have a new ideological wave of people in crypto that want to go back to the basics and want to really hone in on DEXs, that really want to hone in on holding whatever centralized entities are going to remain heavily accountable? Or do we have a flood of retail that doesn't care about the ideology but just wants to make money flow into the space as we see flight from the traditional markets and from foreign markets into Bitcoin as a result of geopolitical instability and as a result of a very strong US dollar and a rallying Bitcoin as a result of rate drops here in about a year and a half? Or do we see both? Probably both. But what does the industry look like in 2 years? That's something that we're going to have to really carefully consider, because what the industry looks like in 2 years is going to be something that sets up for what the industry is going to look like in 10, because the lunch that we're eating right now of FTX going bankrupt, to BlockFi following, and Luna, and everything that's happened over the last 6 months, that is the direct result of years of industry building. What kind of industry do we want to build? The things that we talk about today that do not lead to a giant cataclysm tomorrow could in 3 years. So we need to be very careful about what we allow in this industry now, so that we are not eating our own lunch here in 3-5 years to the tune of a drop of $5 trillion in market capitalization. We want to build a sustainable industry, not one that goes up and to the right 1,000% in 90 days. We want to build a sustainable industry that is going to give us the tools that we need to become financially sovereign. And that, my friends, is what Bitcoin is all about. It is not about making quick money. It is not about becoming a millionaire overnight. It is about generating tools, systems, structures, and currencies that assist in that march ever towards financial sovereignty. Let's read chat. I missed the bull market. Yeah, I bet you do. A lot of people miss the bull market. A lot of people miss the bull market. Guys, I'm really excited for what we got coming here in the new year as well. Really, really, really excited. Let's see. Crypto Sec guy in chat. There's a ton of chat that I'm trying to catch up on here. We can't see the charts. I know. We're going to talk about charts here in a second. Oh, man. Sorry, guys. All right. Well, let's go ahead and let's see. Okay, so I also wanted to talk about this. This is just a little bit of a quick side note. Bybit, which is a pretty big exchange that you guys know about, they've just released their data as well. You can see they're currently sitting on $2 billion worth of assets, over half of that in USDT. Then they've got 17% of that in BTC, 10% of that in ETH. Then you've also got Bybit posting basically a little tiny blog article over here on their proof of reserve. So they've released proof of reserves. And if you hit verify now, it will come over here to this page where they're actually showing you the reserve ratio of their assets. This is great. This is wonderful. Good for Bybit and anybody that uses them. The tricky thing with this is that it has the exact same problem that Binance has, is that that's wonderful if we have Merkle tree proof of reserves. We need more than that. That is not enough financial information to know whether or not the exchange is solvent, safe, that the financial controls are there. Remember, one of the big things that led to FTX's downfall, which we're about to talk about, was not just that they didn't have enough information. It was the reason, not that they didn't just have enough assets. It was the reason partially that they didn't have enough assets. Number one, because of Sam Bankman-Fried, but also two, because of the corporate controls. Sam Bankman-Fried himself said that he was spending no time on risk management, and he also said that there was nobody chiefly in charge of risk mitigation at the company. $32 billion exchange had nobody in charge of risk management? Are you kidding me? So we need to know what the corporate structure and what the financial controls of organizations such as this look like as well. But speaking about SBF, let's go ahead and read on here. SBF tried to destabilize crypto markets to save FTX, says report. This is really funny to me because I actually just finished the last episode of Andor. Tell me, have you guys been watching that show? If you're a Star Wars fan like I am, whew, that show was awesome, and I cannot wait for season 2. Tell me in chat if you've watched Andor. I'd love to hear it. Trades made by Alameda Research were reportedly focused on DPEG Tether's stablecoin. These are all allegations that are not mine, by the way. I'm just reporting on them. Tether executives and Binance CEO CZ Changpeng Zhao worried that Sam Bankman-Fried's former CEO of FTX was attempting to destabilize crypto markets aimed at the now bankrupt exchange, according to reports on December 9th. Messages seen by the Wall Street Journal of a Signal group chat named Exchange Coordination reveals an argument between CZ and SBF on November 10th about Tether's stablecoin Tether. According to the report, CZ and others in the group worried that trades made by Alameda Research were focusing on DPEG, the stablecoin, which would have a ripple effect on crypto prices. Binance CEO reportedly confronted SBF. Stop trying to DPEG stablecoins and stop doing anything. Stop now. Don't cause more damage. Sounds like CZ said that to SBF. SBF denied the claims in a statement to the Wall Street Journal. Members in the Signal group include Kraken co-founder Jesse Powell, Paolo Ardoino, Chief Technology Officer of Tether, among others. The alleged argument happened a day after Binance announced that it wouldn't bail out its troubled competitor FTX, citing reports regarding mishandled customer funds and its alleged U.S. agency involvement. On November 10th, Tether's Ardoino also said the company has no plans to invest or lend money to FTX or Alameda. As reported by Cointelegraph, new details about the failed agreement between Binance and FTX were revealed on December 9th in a Twitter thread. CZ referred to Bankman-Fried as a fraudster, saying Binance exited its position in FTX in July 2021 after becoming increasingly uncomfortable with Alameda/SBF. SBF was unhinged at the exchange pulling out, according to Binance's CEO. In a response, Sam Bankman-Fried claimed that Binance threatened to walk at the last minute, accusing CZ of lying about his role in the deal. On November 11th, FTX Group and nearly 130 companies went bankrupt. You know all about that. So, again, these are allegations that, as far as I can tell, are not proven, but it would not surprise me, to be quite honest, if that was what was going on. And there is a lot of speculation that Sam Bankman-Fried, and this is tinfoil hat conspiracy territory, and I'm not saying I agree with this, I'm just saying it is a theory in the space, that Sam Bankman-Fried was somebody who was trying to destroy the cryptocurrency industry and was trying to make it far more centralized, far more similar to the traditional financial space. There are a lot of theories about that. I'm not going to say whether or not I agree with those theories, but it is a theory, and it is one that I think we should pay attention to, because at the end of the day, Sam Bankman-Fried was in an extremely powerful position, and he was not, as far as we can tell, using that position wisely or ethically. So that does raise questions of why. Was it just greed, or was it deeper than that? We may never know, but ultimately, it is a good thing that he is no longer in the cryptocurrency space. Now, one thing that I also want you guys to know about is this, and I have it in an article over here. 3 things to watch as Washington closes out 2022. Obviously, there's the FOMC meeting. We've already talked about that. And then we've also got SEC market structure rule changes. We'll talk about that probably another time. But this one in the middle here is pretty important. The FTX hearings. Disgraced crypto titan Sam Bankman-Fried will testify in front of the House Financial Services Committee on Tuesday. He's also been invited and threatened with a subpoena to make an encore at a Senate banking meeting on Wednesday. The epic collapse of Bankman-Fried's Bahamas-based investment empire barely made a dent in traditional financial markets. However, given Washington's fascination with crypto and given how much money Bankman-Fried and other FTX executives splashed into midterm races, Tuesday's hearing will offer lawmakers a plum opportunity to publicly batter a notorious industry figure who has publicly admitted to squandering billions of dollars in customer assets. Yeah. Bankman-Fried is bound to get plenty of time in the barrel, but readers should also keep an eye on how crypto-friendly legislatures leverage the hearing to lob shots at SEC Chair Gary Gensler, who has simultaneously been accused of taking a heavy hand against crypto businesses while being asleep at the wheel when it comes to FTX. I'd like to understand from Bankman-Fried what guidance he received from the SEC regarding consumer protection standards. Representative Josh Gottenheimer, Democrat of New Jersey, who sits on the committee, told MM in an interview on Sunday. What requirements did the SEC did they tell you specifically to do? Did they ignore that? Gensler has made points that he thinks existing rules and laws are sufficient to protect customers, but clearly they're not, is what is said. I'm not saying I agree with that. Gensler has repeatedly argued that exchanges and other crypto businesses need to register with his agency to assure customers are adequately protected. Those efforts have been met by fierce resistance by the crypto industry and its allies in Congress. Gottenheimer doubled down on a letter he signed earlier this year that hammered the SEC's enforcement division for launching probes of unregulated crypto businesses. The letter was about making sure the SEC was taking the necessary actions to put in place guardrails in the crypto industry to protect consumers, he said. Later added that any opposition Gensler has gotten from the Hill when it comes to registered crypto companies is not from me. They haven't done rulemaking. They've done a very spotty approach, he said. He's been criticized not just by me, but by lots of people. And leave it to a government agency with an appointed chairman to run that way. Unfortunately, we do not have a very good understanding of what happened at FTX, nor do we have a very solid understanding of what occurred between FTX, Sam Bankman-Fried, Securities and Exchange Commission, and Gary Gensler. What we do know is that we should know more, and we don't. Thankfully, we're going to have Sam Bankman-Fried sit down in front of Congress and be everything but interrogated on what occurred at FTX. And I really would be very interested to see what he says, because Sam Bankman-Fried has already come out and admitted to a lot of things under pressure of one person who's interviewing him who doesn't have the power to throw him in jail. Really curious to see what happens and what kind of cracks form under the pressure when he's in front of Congress. Very interested to see that. We can be praying for everybody at Congress to act in a godly way, but also for the truth to come out. It's very important that it does. So let's recap. Why is this a very important week? Number one, Bitcoin is in a symmetrical triangle pattern, and that symmetrical triangle pattern is likely going to have a major breakout sometime this week. That breakout I'm sorry, I said a symmetrical triangle pattern, a rising wedge. It's very likely going to have some kind of major breakout this week. Technically, we've already broken to the downside out of it, but it's close enough that you could argue that, in fact, we should just draw the trend line like this. So I'm not sure most analysts would actually call that a full-on breakout, or that most people would recognize it as a full-on breakout. So we'll assume that it's not quite done, and that it's not quite broken out just yet. 2, we're also seeing CPI data come out. That CPI data is going to set the stage for the rest of this year and for the first quarter of next year. Are we going to see 7.7 sideways like we've seen before? Are we going to see 7.1, 7.2 as a result of economies around the world becoming more independent of Russia? Now, not so much Europe, but the United States for sure. And the United States is the one that's obviously printing this CPI data. 3, what's going on at Binance? We're going to keep a close eye on that. So far, we don't really have enough information, but I'm a little bit skeptical of the information that we're being given. I'd like more. I'd like a lot more, actually. 4th, we're going to have the effective federal funds rate drop on Wednesday, and that is going to far more so than CPI set the stage for the first quarter of 2023 and for the end of this year. If we see CPI and the EFFR drop, drop. If we see CPI drop down to 7.1, we see the EFFR drop down to, say, 50 basis points, then we'll probably see a rally moving on into the end of the year. However, technically, I don't think that's going to occur as far as because of this rising wedge. And also, I think we may end up seeing maybe some bearish news come out from the Senate Banking Committee and the House Financial Service Committee interrogating Sam Bankman-Fried. We may end up finding out something that could drop the price. So keep an eye out for that. That's going to happen tomorrow. How that plays out is going to be very impactful on the cryptocurrency market, and hopefully we will get more information about what actually occurred at FTX, why it happened, and maybe learn a thing or two about what we can do as an industry to avoid it happening again. And finally, what am I forgetting here? No, I think that's mostly it. I think those are the main points that we're making in today's stream. Am I forgetting something? No, I think that is it. I think those are the points. So we're going to pay very close attention this week. Make sure to keep a very close eye on the channel here, because we're going to be covering all of it, and I wouldn't want you to miss any of it. Very, 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 very important day and week here in crypto, and it's going to set us up perfectly for the end of this year, moving on into Christmas. If you guys don't know, obviously, not obviously, but as I told you, we are going to be taking next week off, and we're going to be taking the 3 days following that week off as well to spend time with family. This is going to be our first Christmas as a family, and we're going to enjoy it. I really encourage you guys to do the same. It's been a long year. Get some rest, guys. It's been a hard year. Rest up, build your positions, and get ready for the bull market, because it's coming. But don't stress too much about getting it perfect. Lock in at a price that you like and hold it. Invest. This is not the greatest time to be a trader. You can make a lot of money trading if you're doing it daily. But if it's not your profession, you're an investor, load up. Load up down here at these levels and come back when the market is moving to the upside. Let's go ahead and read some chat. We have a Flavio Goncalves. Tell me if I'm saying that right or not. Probably the accent is probably not right. Said, should I take the profit on the top of the neck of the bull market and then only invest in the next bear market? That's the macro way of doing it. That is a very profitable way of doing it for sure. And that's what I'm trying to do. I'm trying to load up as much as I can. We are, as a family, trying to load up as much as we can down here towards the bottom for the rally to the top. Hashtag Fensov, absolutely. When people's in chat said, have an awesome weekend. All absolutely, guys. Have an awesome, awesome weekend. Let's see. I didn't show the charts during the TA. Okay, well, let me do that really quickly. Apologies for that. What I was saying here is that on Bitcoin, we have a rising wedge right here. We've kind of broken bearish out of it. We don't have a lot of pressure to the upside. We have pressure coming up in the bottoms, but not a lot. And then we also have here this curve path that I was talking about. Right over here, you can see this curve path that I was talking about earlier is right here. Basically showing me that the market is going through the end of the rally and moving into the beginning of the drop. Looking at Lux Algo, we can see that we're currently seeing a sell signal, an EQ cloud almost an EQ cloud reversal. We're actually resisting again. We're actually using the EQ cloud as resistance right now. It could drop out of it. We're seeing the constriction of the reversal zones, indicating a breakout and a surge of volatility in the next couple of days. But we do not have a confirmed sell signal, although we do have a sell signal at the moment. That's most of what I was talking about on the charts. It was not a chart-heavy day, so you didn't miss much. It's close enough. I'm Portuguese, by the way. Sounds good. I wasn't sure. I was thinking Italian, but Portuguese, there you go. I'm learning Spanish. I'm working on that Duolingo. I have a Spanish-speaking wife, so I'm trying to learn that as well. Crypto's so political these days. Oof. Yeah, it is. It is very political. And you cannot rend crypto, politics, geopolitics, traditional financial markets. You just can't. They're all tied too closely together. Stress-free investing, buy anywhere in this zone. Put it on a Ledger Nano Cold wallet, come back in summer 2025 and sell your Bitcoin. Simple. If you have the patience and don't need crypto income, boom, that's what you should do. Continue staying tuned because it's important to know what's going on with your investments. I wouldn't say just buy it and ignore it. That's not wise. But as far as the strategy, that would be a solid idea. All right, guys. Well, that's going to do it for this stream. Joker's Wild said, Crypto Jebb said, you can always tell the bottom is near. People losing interest, always a good sign. Happy Christmas to all of you and your family. Yes, happy and Merry Christmas to all of you guys. Really appreciate that. Let's see. Whatever happens now is a good time to DCA in. Absolutely. All right, guys. That's going to wrap it out for today's stream. Before I go, I do just first want to thank each and every single last one of you for watching as always, though. And I will see you guys in the next video. Peace.
Oh, I got a real good feeling.